Hey everybody, Matt Engfer here, CEO and co-founder of Cubby. Today on our Students of Storage podcast, we have Karl Graham of Luminus Capital. We talk all things self-storage, how he got into the industry from a crazy history in the oil and gas business to building a private equity fund. After syndicating deals, we talk operations. We dive into value creation and his kind of heartland thesis for his portfolio build. And then we dive into a lot of things, AI and technology. I love this conversation. I think Karl is one of the sharper, more critical thinking operators around. Hope you enjoy it. Hey, Karl, thanks for being here.
Yeah, pleasure to be here. Thanks, Matt.
Absolutely. Always enjoy our periodic check-ins. And this time we got the microphones on and we're recording it. But for the folks listening, I always like to start with your story. But before we get there, tell us a little bit about just like a snapshot of who you are, what Luminus Capital is, and what it is that you're up to today in the world of self-storage.
Yeah, sure. So who am I? Primarily husband, father of 6 children, and live here in Tulsa, Oklahoma, where I was born and grew up. And Luminus Capital is kind of a boutique investment firm here in Tulsa. We have 2 primary investment strategies. One we're here to talk about today is self-storage. And then my business partner, Chris, we've been partners for a while. We both actually share a professional background in the oil and gas exploration industry, which is where I spent the first 10 years of my career. And so we also have a mineral energy, specifically mineral right investment strategy that he champions. And so that's kind of us in a nutshell. Luminus Capital started end of 2020. And it's kind of a side project that's kept snowballing and it's turned into a full-time endeavor for me. And then Chris joined full-time about a year ago, a little more than a year ago. So
cool. Yeah. And you own and operate how many facilities today?
We have 25 locations, primarily here in Oklahoma. We call it the Heartland. And we also have a footprint in Missouri and Kansas. We've owned in Arkansas. We'd love to own some more there. We sold the one location there. Just didn't have the scale for where it was in Little Rock. And but probably 75% of our assets are here in Oklahoma.
Awesome. And walk me through the structure of Luminus. Like, is it funds that you're deploying? How does it work?
Yeah. So principally, until this time last year, we principally raised, would identify an opportunity, underwrite it, put everything together, and then we would syndicate the equity to a group of really high quality partners that we have. And we kept doing that. We did that for the first 4 years. And that was really by design. We could have we could have raised a fund or blind pool or something like that. But we really liked the idea that, especially even compared to what we're used to in the upstream, exploration space, really high risk, really high capital intensity. We were able to get these opportunities under contract and really understand them in their entirety, understand and remove as much risk as possible, and really put it on a silver platter for our investors, and allow them to make the investment decision for themselves. And they like that. It was good for us. We got good terms that way because we're able to reduce a lot of the risk before they make the decision. And so we did that for 4 years, and that is about 18 of our assets are owned that way. We're acquired in that way. A couple of times we might package 2 or 3 properties together if we were acquiring them about the same time, just kind of depending on timing. And then right around Thanksgiving of 2024, we began raising our what we call Storage Fund One, Luminus Storage Fund One, and that was we'd kind of been waiting. 24 was a slow acquisition year for us and most people. Our portfolio has maintained, has been very healthy. We were kind of waiting and just looking for the window to open up for the bid-ask spreads closed, and knowing our next step was going to raise a fund just to give us some more strength as buyers, be able to act quickly as buyers, and also reduce some administrative just burden that comes with managing. I think it was like 15 partnerships and lots of bank accounts and lots of loan agreements, and so we began raising that fund around the holidays, which I wouldn't recommend if you can avoid that timing. You might be able to relate, but we got that money raised pretty quickly, and so we've been busy through 2025 deploying Fund One. We're about 65% deployed, and looking for more opportunities here. We acquired 8 properties last year in Missouri and Oklahoma, and that's what we've been up to. And so that's kind of gives you an idea of the ownership. I think we'll continue that model. We see it. I don't see us raising like a really big fund. We marketed this and raised the capital as more of a tactical fund. Like it's a lot of the same investors. It allowed us to bring in some new investors, which we were wanting to do. But we still see it as a pretty tactical fund. Like this isn't a big 5-year, like a drawn out 5-year commitment, where your capital is locked up for a long time. We're trying to be very surgical and deploy. We tried to raise the money we thought we could deploy in about 18 months. So we're 12 months through that, 65% pretty much on track. So I think we'll continue to do that. Maybe the scale changes just to meet the opportunities that we see in the market. So
cool. Awesome. So I want to rewind. That's a good kind of point to where we are today. But you mentioned mineral, oil and gas. Walk me through kind of the life before Luminus and what it and how you got to this point.
Yeah. The life before Luminus, corporate America, I guess, is one way to put it. But I went to undergrad at Colorado School of Mines and was a geological engineering student or graduate. So I have an engineering degree, but professionally, I would tell people I was a geologist. And my job, I worked on usually a team of 2 to 3 other professionals, engineers, and business people, and our job was to find economical oil and gas reserves that we could drill and produce and generate shareholder value. And my role on that team was really identifying opportunities. We usually would be responsible for a geographic area, like say like Western Oklahoma or the Permian Basin or part of the Permian Basin or something like that. And so as a small team, a multidisciplinary team, we would be responsible for kind of managing the assets in that area and then also looking for new opportunities and trying to grow the business in that geographic area. My role would have been principally to really come up with ideas or evaluate any ideas as far as this, what we call the subsurface risk. So really the technical risk of trying to understand how much oil is on there, is 2 miles underground that we can't touch it, we can't see it. But trying to get to the best answer on what's possible. And then as a team presenting that to management, presenting the opportunity, presenting the risks and the potential rewards, ultimately trying to get the CapEx approved by the executive management or board to then go drill and find oil and gas. And so I did that, some form of that, and kind of as the career progressed for about 10 years, all over most of the lower 48. Sometimes more focused on an area where there's existing assets and we're really just kind of developing those assets. You kind of know what you got and you got to keep proving. Every well we drilled was depending on where, like we're talking about a $6 to $12 million hole in the ground at the end of the day, with pipe and cement and some facilities at the surface when it's all done. So that was the nature of what we were doing. So our team of 3 or 4 people might be responsible for getting $50 to $150 million of CapEx approved and deployed each year. So that's what I did for 10 years. And I went to business school towards the end of that, thinking I was trying to position myself to be an executive at a big publicly traded company, most likely. That was kind of my aspiration and the track I was trying to be on. And graduated from Booth in 2017. And towards the end of that, really just realized the company I was at, they had closed several offices where I was interested in working. And I had worked at all the other offices and realized my family didn't really like those places. And by that time I had 4 children. We were in Houston, and I just realized my career track and my employer and my family were just kind of misaligned. And so I took an opportunity to join Chris, I mentioned earlier, my business partner back here in Tulsa at a privately owned oil and gas exploration company. Is backed by a private equity company. And so I moved back to do that in 2017. I've been here since then. And that kind of scratched, I call it stepping down away from the mothership, kind of, like there's a progression towards entrepreneurship. And in the oil and gas space, that's what entrepreneurship looks like. You go get $200, $500 million commitment from a private equity fund. You're really a mercenary management team. You have very little ownership because most of us don't have that kind of capital to put to work.
And don't lay it around. Yeah.
Yeah. And so that scratched the itch. We got to, you get to wear a lot more hats, very dynamic, very fast paced. I got to use some of my new commercial minded skills that I have been honing, and really enjoyed that. And that was coming to a close, and ultimately still wanted to do my own thing somehow. And anyways, so that's what ultimately led to what we're doing now. During COVID, we had plans to sell our oil and gas business in summer of 2020. We kind of accumulated our assets. We were towards the end of our business plan when COVID happened. I was at spring break in Phoenix at spring training, and yeah, like the bottom fell out. The capital markets closed. Oil price went negative. I have a screenshot on my phone of that I'll never forget. And so our plans for sale and everything just completely stopped. Our mission for the next 6 to 9 months was basically a survival mode, get through that so that we could figure out what to do next. And so we did that. But in the meantime, I had already been thinking about kind of Chris and I both, what do we want to do next? We wanted to be in business together. And Chris is a smart guy. He kept bringing up real estate because, there's so much cash out there and interest rates were really low. We should buy, long-term assets probably. Inflation's coming. We don't know when, but it's coming. And that sounded boring to me. I had been looking at buying an operating business. I like tinkering. I like optimizing things. I like challenges, and I like betting on myself and on a team. And I had gotten used in the oil and gas business. It's very, very cyclic, very capital intensive, very high risk. And so at the end of the day, the things you can control can end up being a pretty small part of the equation. And like our venture was a perfect example. I mean, we did most everything right. Most of what we said in our business plan played out, but then COVID happened, and there's nothing we could do about that. And it completely dominated everything. So I was ready to make a bet on ourselves and not just on a market or not just on a commodity price or something like that. And so that desire plus Chris's continued wise input about looking into real estate led us to eventually realizing there's a couple of real estate assets, niches in the industry where there's a lot more operational leverage available, where you can be rewarded for being a good operator, for being doing the hard work, as opposed to just making a good decision on a market or on timing. And so we looked at marinas, actually, which I'm still fascinated by. I would love to get into that space someday. RV parks, and then storage. And ultimately storage, we discovered there was, you can buy a bite-size kind of storage facility, like a starter kit storage facility, and it'll sustain itself. A small marina is not really it's more of a lifestyle thing. You can't really manage it remotely. It's more of a retirement kind of thing. And so that was what we bought one and just I committed to focusing on it for 6 months to see where we could go, and here we are. So
cool. So I'm going to double click on a couple things you said.
yeah.
You were out there with a team of 3 or 4 looking for plots of dirt that could justify a $6 million investment, $12 million investment, with a team of 3 or 4 for 10 years in what sounds like a pretty small territory or tract of land that had probably been picked over for the last 100 years, right?
Mm-hmm. Oftentimes,
it sounds like a grind.
It was, yeah.
Yeah.
You get rewarded for relentlessly pursuing your curiosities and not accepting defaults, for being contrarian, but in stuff, that can reward you, but also just not leaving any piece of information or any rock overturned.
Literally
in my case, rocks. But yeah, I was very successful because I'm curious to a fault. It cost me a lot of time sometimes now, but you oftentimes can be rewarded with a little nugget of information or something that could be very valuable if you follow through on it. So yeah, it is a grind though. And that industry and that profession has really transformed. And while I was still active in it and still today, that's continued. It's the nature of what they're doing in upstream, oil and gas right now it's turned more into a manufacturing mode. Like most of the reserves for these unconventional plays that are kind of the mainstream source of reserves right now, most of the reserves are understood. Their land is acquired. It's more about how do you extract it in the most cost-effective way possible. While unfortunately, regulation has made everything more difficult, more expensive, and the capital markets have made everything more challenging as well. So it's really changed the nature of what my role would be in that industry. So I feel like I'm thankful I transitioned when I did. I wasn't looking to transition, it wasn't an intentional thing, but I'm thankful in hindsight about it.
Yeah. Cool. And then you had 4 kids when you went to grad school. Did you do that full time or were you going at night?
So I had 3 when I went, and I had 4 when I graduated. And I did at University of Chicago. They have an executive MBA program. And so I maintained my job through that. It was a pretty big deal. I was able to get support from the CEO and kind of COO at the time, and so I would fly to Chicago from San Antonio and then from Houston. In their infinite wisdom, my employer decided it would be good for me to move 2 months after I started business school to Houston, which completely disrupted. I had it all. I knew the flight schedules, like it was all figured out, and then all that changed. So anyways, I would fly to Chicago every other week for 3 days, basically. And it was kind of like 2 lives. I mean, it was the most work and most intensive time in my life by a mile. And then we had our fourth child. Julie was born about halfway through, and it's wild times.
Wow. So your wife, we need to interview your wife too, because I'm sure she was equally grinding at that point. Wow. Okay.
She's way more impressive than me.
Yeah. And then you're like, honey, I'm gonna quit my job. We're moving back to Tulsa, and we're gonna start going to business with my good buddy.
Yeah.
And trust me, it'll work out.
Yeah. I was pretty miserable at that time. I mean, there's just so much misalignment, and it was just so obvious that it was difficult because we had moved several times and we didn't have, it was difficult. But ultimately,
no community
really
and
Mm-hmm.
Yeah. Wow. Awesome. Well, I have a lot of respect for you, man. That's incredible. That is a grind that, and everybody says they work hard, but when you describe that period of your life, I'm like, wow, man, there's times in your life where you're really, really up against it, but you got through. We have one of the guys on our team is a Booth graduate. He raves about that experience.
It was everything I wanted. It was very transformational. It suited me really well. So there's a lot of haters on business school out there. So I'll just take, the opportunity to say that I think if you know what you want and you find the right fit, it can be, for me, I was looking for transformation. I was looking for, to diversify my skills and my brand, my personal brand a little bit. I didn't want to be a geologist, a technical contributor my whole career. I knew I could do more than that. And Booth was a really good fit for me, just academically and from a network standpoint. So yeah, it's great.
Yeah. Cool.
But
cool. Yeah. Work. Totally. Awesome. So you, it's so funny that you described that experience and then you talk about investing in real estate, and actually what you wanted is something more hands-on. And that's what led you to storage. You're a glutton for punishment, it seems.
I think, yeah.
Cool. But it's also, I think your curiosity you described, I think like of all the people that we work with at Cubby, like I think that's when I look at your operation and I see what you guys are doing and how you're constantly tinkering and moving forward, it seems like a superpower rather than like, something that I think, I admire that about your operation when I look at it. Cool. So okay. So let's, you'd be hard pressed to say that we're on a podcast that primarily deals with self-storage. Let's talk some storage.
Yeah, right.
That's great though. Tell me about, let's start with maybe like the heartland. Obviously you're from Oklahoma, the region. Is that the reason that you like it, or is it more than that? And why did you continue on that path after acquiring that first facility?
Yeah. I like it. I suppose, we're biased. However, the original reason for being focused here, it was really just out of necessity. When we started, in 2020, 2021, really, we started looking at the asset and really starting to understand valuations and trying to find something we thought we could invest in and buy before valuations and the capital inflows had really come in force. And so we saw just a glimpse of what storage used to be like from an investment, especially, secondary, tertiary market storage, where everything traded on an in-place 10 cap. I mean, that's what it did more or less, and it rapidly transitioned from buying an in-place 10 cap in a market with 100,000 person population to trading on a pro forma at all, and then a pro forma 9, 8, 7 cap. The sky's the limit, kind of, or the floor is the limit, I guess. So we were able to watch that and see the difference. So that was interesting. And the capital, so there was so much capital and so much fervor. And at first we looked at a much larger area. We're just looking at deals all over the country, and it became obvious, like, we really just focus is very helpful. And so ultimately that's what we decided, is like, this is what we're going to focus on. We're not going to look at Georgia. We're not going to look at, Colorado or whatever. We're right here. If we get a lead here, I can go drive and shake the owner's hand today, kiss their baby, whatever, and get the deal done. And that was empowering. And as the market got more and more competitive, that became sometimes like the only little tiny edge you could have over increasingly competitive market and more capital who is more and more frequently far away. So if I was competing with someone in Colorado or Idaho, and I could actually see the site before I make my offer, then that's advantageous, because the broker knows, like, I'm not assuming I'm not going to come back and retrade because of some deferred maintenance or something that I didn't know about. So that's what ultimately led to our portfolio being where it is that was where we could get deals done. That's where we had a tiny bit of an edge, maybe. Today we could look further afield, and we've expanded our radius of where we look. But it is still helpful to have some focus and now from an operational perspective, with what we're trying to do, all the tools that maybe we'll talk about some of our, methods and how our operation works. But there's definitely value to having some scale in a market or in an area. We appreciate that more now than we used to. So that's kept us from.
What is the value of it operationally for you? And maybe use this as a jumping off point to talk about how you run storage.
So there's a couple of obvious ones. So we manage remotely primarily, exclusively. We don't have full-time employees on site. But we do use local contractors basically to help provide what services are needed on site for getting units ready for customers, keeping an eye on things, meeting vendors, picking up trash, basic stuff like that. And it's easier to have a good local contractor if you have a little bit more work for them. If you have, if you can pay them $1,000 a month instead of 500 or whatever, whatever it is. So, and larger or more facilities just make that easier. That fixed, what is ultimately like kind of a fixed expense. So that's just one simple thing. The other is marketing. Marketing has become increasingly important in our business, especially as demand has come off of all-time highs and is now, I would say, below the mean. It's just really critical, and there's value in scale just from a digital marketing standpoint, in a locale. Whether you're running ad campaigns, if you can afford a larger budget because you have more locations in an area, Google rewards that, or even just having numerous Google business profiles in a market, that's the best return on marketing effort that you can get, because it's free. It's high-end headache cost to manage and everything, but if you have 3 of those in a market, it's really valuable, really powerful. Those are a couple of real practical examples, I'd say.
I mean, they're practical, and like the first one you mentioned with the contractors is it sounds obvious if you're like new to the industry, and but it's actually the thing that's the hardest part to actually consistently pull off, I think, to deliver quality on the ground operations. And it makes sense that, a focus on certain markets where you can have a significant presence pays off.
There's
so how
some
many
of that,
folks?
Go ahead. I was just going to give a couple examples on that, and because it might be helpful for some people, but we certainly have gotten away with having one small facility in a place 4 hours from here, which might as well be 10 hours from here. Really, it's basically the same for us. So you can certainly do it, and a lot of people do it. But as you add more and more locations, and you're the kind of the center of that hub, whether it's you and a partner, or you and maybe one or two employees here, locally in the office, so to speak. The nature and quantity of things that come up if you have 10 of those, 10 locations with one individual each, the quality of that individual out there and what they're able to just kind of internalize and handle, whether it's if they can be good enough to figure out how to adjust door springs, or if they can figure out how the gate works and at least do, very basic troubleshooting, which is going to be inevitable, or basic repairs on the facility, whether it's gutters or broken latches or things like that. That's where, from a operational scaling standpoint, if they're really good, it enables you to stay lean in the office, so to speak, because they can just internalize and handle a lot of issues that otherwise are going to end up a work order and something you have to call the vendor now, and you have to coordinate the vendor to get out there, get them a gate code, all that. And if that person, boots on the ground, or we call them a caretaker, if the caretaker can just handle that, that compounds big time once you have more than 3 locations, say.
Okay.
So that's kind of a specific. And at the peak, we have in the Tulsa area like 8 locations, and we have a full-time employee who roves and does all sorts of stuff. And it just makes those facilities are, from kind of the property manager standpoint, they're the easiest because you have a guy who just can get it done, just takes care of it.
Yeah.
So
cool. Okay, so that I can see how this it compounds, as you said, and it becomes an edge that other operators who don't have the same advantage that you've built can't take advantage of, right? And marketing was another example you mentioned. Just talk to me about the unique, like if I was an investor or a potential investor in Luminus, talk to me about the edge that you bring to the market, and like how you create value above and beyond what an average operator might be able to pull off in one of your markets.
Yeah. I mean, there's a lot of good investors and sponsors in our space, and it's attracted a lot of really smart people. So I'd say some advantages we have specifically are, I think our background being coming from a very, very complex industry like oil and gas. Our default approach to things tends to be more sophisticated or more technical, maybe just as a bias. Now, sometimes sometimes we waste time on that. We have to be careful about that. But so I think with that comes a level of rigor and just attentiveness to detail that, from a risk management standpoint, is a big deal to our potential investors and our partners. I think, I can't remember, there's a lot of quotes along these lines, but avoiding bad deals is a really important part of having overall returns that are above average over the long haul. So that's one thing I would say. Just our approach to risk management, given where we've come from, is naturally pretty rigorous and pretty thorough. This is a much easier.
I can attest to that as a vendor who served you for a very long time. When you came on in the earliest days, the rigor was apparent to us, and we're very grateful for it.
Yeah. I mean, you guys, I appreciate you saying that. You guys, though, you used it to your advantage and honed your product and reacted, and were open-minded, like I've shared with you. And I think the result has proven itself. Your all's work and attentiveness to input has definitely paid off. So
It's well, when you're as rigorous and clear, the clarity of thought and rigor that you bring to, for example, some feedback on a software, some software functionality, is one expression of the secret sauce that you're talking about. I mean, I know for a fact it's applied in your marketing and how you're looking at Google and how you're looking at digital. And I'm sure there's other places where that's happening as well, on the buy box, on returning capital, whatever it might be. It makes a lot of sense. Where is it going? What's next? Like, what does your operation look like today, and where do you think where are you excited to evolve it?
Operationally, so recently we've been growing the team quite a bit. It's overdue, and I had a really good kind of period of end of the year reflection. I was really deliberate about carving even just a few days at the end of the year to really think and plan for this year. Because we were fundraising the prior year, and I just totally missed that window because of that. And I feel like I paid for that almost all last year. And there was a lot of other change just in our business, and starting up a mineral strategy and having a fund for the first time. That was just a little bit different. Managing capital calls and things, and it's just different. Anyways, so we hired some more specialists on the team. And I'm really excited about what they're going to be able to take on and own and probably do better than me. Hopefully do better than me in some ways. So specifically, like, data integration, kind of business intelligence expert, financial analyst. Recently, I like getting in the weeds and numbers, and I like finance, and I like underwriting, and one of my roles in the past company was oversaw a data strategy and a software in our oil and gas business. So I like that. I wouldn't say we're on the bleeding edge of things, but we have pretty good vision as to where software and where technology can make a big impact, and we try to focus our efforts on those high impact efforts. But so I like all that stuff, but I'm really glad to have some new members of the team to help push those subjects forward and really own them. Operationally, so yeah, just leaning into that. I'm excited about what Cubby's bringing to us and going to enable for us on the data side, on revenue management side, on our customer support and sales center. Right now, we second half of last year, we were focused. We called it LPM 2.0. Internally, our property management company, we call Luminus Property Management, or LPM. So one of our operations director went on maternity leave and had twins, actually, and they're healthy. So we're really excited about that. She's just came back.
Lots of babies at Luminus. Yeah, perfect.
Yeah, twins. Yeah, identical girls.
Great responsibility. Cool.
Yeah. Anyway, so that prompted us to really look at the organization. We hired some people, and we really overhauled some things operationally that we're starting to see the results of that. Now she's back. We've hired some more people, and we have some of these overhauled systems in place, and we are now laser focused on basically sales and revenue management, I would say, with a heavy emphasis on sales. And so I'm really excited about where that's going to take us, because we've been fortunate that a lot of the markets we were in, even over the last 2 years, the demand actually stayed pretty healthy. It wasn't until really last summer where we saw pretty much all of them come below average. We've been able to maintain revenue pretty much. Well, I think we have 2 locations that were down 1 or 2% over prior year, but at the end of 2025, and the rest were all up. So we're really happy
huge.
about that. I'm really proud of that. There's a lot of hard work.
Not everybody is in that boat.
It's not nothing. And we do though have also some newer locations that are definitely behind our forecasts from that we acquired last year. just not really. We just didn't. Most of the market didn't anticipate the headwinds and on the consumer demand side of things that we experienced last year. Just interest rates went down, but people just didn't buy in homes and move as much, and that puts a huge damper on storage demand. But anyway, so I'm excited where this effort in sales, this focus on sales and revenue management is going to take us. Things like just honing and refining scripts, going to kind of version 2 of value-based pricing and upselling. I'm trying to think of the others. Managing leads. Like we've had kind of external lead management for storage customers, and we're trying to get that as integrated as possible. And the other thing other subject I'm excited about is really where AI is taking us.
I'm heading right there, because I think of everybody that we talk to, and we like, I want to dive into this. We don't have all day, but we could spend all day talking about it. But you talked about it. Like you get the people doing the right things, the sales organized and dialed in with a process. You have the technology all in place. You said you're not on the bleeding edge. If you're not on the bleeding edge, you're pretty close to it as far as storage operators are concerned. You're very modest, but so you got this data structure in place. You have now the talent to help you make the most of it. You're ready. And I know we've talked about it. You're in Claude every day and pushing it to do more, and interacting with your data. Tell me about what you're excited to unlock with AI here.
Yeah. I think just continuing on the sales and revenue management subject, 2 things come to mind. One is having our call data live in a structured database, because we use Cubby call. So we have that, and we can easily relate all that call data and metadata to our FMS data, rents and pricing groups and everything else. So I'm really excited about being able to get live insights from our actual customer interactions to our managers from a coaching and training standpoint, from an accountability standpoint. Like, are they following our scripts? Are we upselling? And even more qualitative measures that AI can provide, like that Cubby also helps provide. But are they being friendly? Are they being efficient with the conversation? That kind of thing. And I think, there's just the voice transcript data it's really exciting to think about what all can be done with that. So that's a big one just in general, I'll say. And we spent the last 2 months, we had 60,000 transcribed calls. We've been transcribing our calls since 2021, just for this exact reason. Like, I have a history of understanding that even if you don't know how you're going to use data, or even if the technology or the tool's not here yet to maybe put it to use, very clearly there's going to be value in having all those transcripts. So, and we've been doing little things over time with that our previous call center software allowed us to do. But anyway, so we spent the last 2 months going through all that. We've established, what are the top frequently asked questions per location? What are the FAQs that had the lowest quality score from a customer satisfaction standpoint? That, by the way, that's calls about rent increases. Why did my rent go up? But what are the FAQs that have the highest satisfaction? What are the most common complaints we get? So all of that, we just have a report from all 60,000 calls, and just instantly we can turn that into content on our website, obviously, SOPs for our team. So that's just even static historical data. That's not even like live data coming in. So anyways, that's a big one I'm excited about. We're focused on. And then another is revenue management. So we've been active on that subject for several years now. And I would say, and Cubby's helped facilitate some of the features improvements y'all have developed and continue to develop, help make that like time efficient for us, like possible for us with having 5,000 some odd units to somehow look at and manage every day. But what we've lacked in up to this point is really being able to look at results in a systematic, more analytic way, the way that I would be satisfied with, as opposed to kind of looking at it from how many people moved out? Like, do we think it was because we raised the rent, or like, kind of from a gut feel standpoint? So, anyways, there's a lot of ways, a lot of hypotheses we're eager to explore, as we get all that integrated and we get our new teammate kind of, to attack the problem. So,
Sure. Yeah, it's so exciting. I'm giving a talk on this at the SSA in the spring, on just like where agents are headed and what we're seeing, even just how we build software or listen to our calls, for instance, with our prospects and salespeople, all recordings. The same thing on my end. It's just like, it's so exciting. And there's examples creeping up in other verticals and other pockets of the economy that are really, really remarkable. And I don't think anybody understands how fast it's coming, actually. I'm not like one of these guys who's, promising we're going to get to the moon in a short period of time. Like, I try to be very measured and realistic about this. And I know self-storage is maybe not the poster child for technology adoption, but I do think we have a unique opportunity in the industry because compared to other industries where AI is already making monster inroads, storage is simple, relatively speaking. We all know on the ground it can be complex day to day, but I think it's going to be wild to see that, like, anything you do at a computer in the storage industry in the next 12 to 24 months is just going to be completely 100% automated. And so, like, when you're talking about revenue management, we've historically focused on like the machine learning aspect of what we bring to our product. Like, basically what everybody in self-storage has tried to do, which is guess the right rate with data science and a lot of smart thought that goes into it. And that's still valuable, and it will always be valuable. But actually, when, Karl, you have the ability to, leverage this alien technology to be really smart about your rates, what becomes valuable is not just like the analysis, but the picks and shovels, because you have your own analysis that you want to run. So, like, how can you, show a rate to someone on mobile versus desktop, or just things like that, as opposed to or take action. So if you notice that somebody is going to move out, can we have an agent send them a rescue offer? Maybe downsize into a smaller unit with a discount instead of completely vacating or something like that. So there's all these thoughts that are flying around and we're working on, and folks like you are just kind of like out there doing it, on your own.
It's been very exciting the last like 9 months. I mean, we have been using AI kind of like, as I described earlier, just aware, can see the possibility, but pretty early on I could tell there's what I was able to do with like ChatGPT or whatever. And then there was, I'd see evidence of it, videos, or papers or whatever, of like, if you know how to code, there's like, you could do expert mode AI, and that was a whole nother thing. And I was like, well, that's not me. So let's just play with this and understand it, use it how we can. And basically, and I have some friends in the space that invest in that space and kind of keep my ears open. And towards the end of last summer, it became, I think it was a tool called the agentic stuff started coming out, and it became really clear that expert mode was now accessible to kind of the fifth graders of the world, if that makes sense. I kind of put myself in that,
You and me both.
that grade level as far as like software goes. So I was like, okay, it's time to like get serious about this. And then even since then, then it used like agentic stuff still took, a lot of manual work and a lot of just a lot of work still. And now 6 months later, now it's just even that friction is gone. And it's pretty incredible. I think, I have there's a lot of interesting thoughts about it, but we're excited about the utility of AI voice agents. I mean, one big operationally, just going back to operations a little bit.
Yeah.
A challenge scaling. We have our own call center, and so they serve our customers 7 days a week, 12 hours a day, and that's better than most of our competitors and most of our markets, which is a big strength for us. But you scale that by the person, right? So it's in a step function, and so from an operating overhead standpoint, that can be kind of a challenge, and also when you buy a new facility, which we did 8 times last year, you generate a lot of phone call traffic for the first 6 weeks. And so that really impacts your service levels. It's impossible to plan for that, especially if we're acquiring a facility that has billing at the first of the month. It's inevitable you're just going to get flooded for like the first 2 months right then. When we do anniversary billing specifically for this reason, to spread out our call volume, because it's impossible to scale a call center if 90% of your volume comes in like 4-day period. However, if you have a computer answering the phone and can provide the service the customer needs, problem solved, right? And so I'm really excited about where that's going, just to help us never miss a call, help some of those customers in the middle of the night when we're just not going to have someone on the phone. We actually had as a part of our LPM 2.0 goal, one of our goals is, let's hire 1 or 2 people to work the night shift, just so we have someone when the inevitable things come up. Internet goes out while someone's on the facility and then they can't get out, and it's like, and no one's there to answer the phone, for example. So, but actually we realized an AI voice agent is a much easier solution for that. So
yeah, they're getting so good so fast. We see it every day, just like literally within a day. You'll see some noticeable improvement, and I think that I think a year from now, these things will be like water. They'll all converge on perfection, and you'll just be able to rely on them, and not just to let them open a gate, but to pitch somebody on some upsell feature, or get them on auto pay, or rescue somebody who's moving out, do all sorts of stuff that seems very complex today, but these things are getting so good, it's crazy.
I mean, I think it's the reaction time and the actual voice, the actual interaction, as that improves, I think that's the big critical, is an agent really good or not, like, aspect right now. But even just like, for sure, if it can speak clearly and interact with the person on the other line well, it knows how to sell. Like, these LLMs have incredible insight on handling objections on a sales call, or coming up with ideas and how to upsell something. You just have to make sure it doesn't hallucinate and offer something you don't have. But
right.
when we've used them to look at scripts and stuff, that's what gets me really excited. It's like, wow, like this knows more about how someone is storing it and how to handle a sales call than I do. I'm not a salesperson. And so if I can marry that kind of quick ability to quickly generate an insight or handle an objection with a really smooth sounding voice, that's going to be pretty powerful.
It's going to be great. It's going to be great. You guys are going to be one of the first ones to kind of master that. If I'm looking into my crystal ball, based on what I see and how again, how rigorously tuned in you are to the little nuances that really matter. I know you're already pushing us. You're testing a lot of different things. So bring it on, and I wish you the best for it. God, I want to do this for another hour because I know that there's a lot more to talk about. Maybe we have you back on some point in the future.
Yeah, we do episode 2 later.
Sounds good. Thank you so much for hopping on. I really appreciate it. I always enjoy it, but I think everybody will take something away from this. And anything else you want to drop while you have the mic?
What I'll say is, maybe this is usable or not, but everyone has a story of some friend of a friend who's just made a killing in storage. And I don't want to be a naysayer. I don't want to discourage people, but that's our biggest risk right now is the people thinking this industry is the same it was 10 years ago. And it's not. And a lot of those people who are trying to sell properties right now and not able. So try to
the vacation is over and the tourists are going home now.
Yeah. And it's a lot of work, like to do it well. Like if you're competing in our market in the small town and you think it's going to be mailbox money, it's not.
No. Karl will run you over if you try to if you come into his market and try to compete with him that way with that attitude.
If things are good enough, I might give you some tips, but it's gonna have to wait till we're crushing it. So
okay, well, I'm sure that I can see it in the numbers. You're doing great. So thank you so much for hopping on, and we'll catch you on the next one.
Sounds great. Thanks, Matt.